Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 11th through November 15th. We're in part one of our weekly trading game plan. We'll try to help you make money trading post-election. So we got through the elections, got through the Fed interest rate decision. We'll talk about the impact of all those and how we can make money trading post-election. So let's get started. Welcome, MD Fairchild. Thank you all for joining us in the chat today. Hope you all had a great trading week and are doing well. So here's our Google document with our notes for part one of our weekly trading game plan for November 11th through November 15th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas, etc. You can find a direct link to this Google document in the description box below. We store all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as previous weekly trading game plans. You can also find a direct link to that Google Drive folder in the description box below. Welcome to Ricky Khan. Thank you for joining us. Hope you had a great trading week and are doing well. So let's see how the markets ended up on Friday. And we'll do a breakdown from there. So we see all the markets were up on Friday, pretty much ran up until late in the afternoon, then retraced slightly. So the Dow ended up 0.60. NASDAQ up about 0.1%, S&P up 0.4%. So again, a pretty exuberant run and a little bit of a retracement later in the day. We'll see, I believe all of the indices made new all-time highs. We had 56% advancing, only 40% declining, had 88% new highs, only 12% new lows. We've now got 61% above their 50-day moving average, only 38% below. And we've now got 67% above their 200-day and 33% below. So as we'll see, pretty much post-elections, pretty exuberant run that will continue to go over. See Friday, some profit taking out of the Mag 7, some rotation out of the Mag 7, broadening of the market. Tesla had a very positive run post-elections. And again, we see a rotation back into like industrials, some of the financials that was down earlier as well. Real estate, we see a decline in the bond yields. Benefits real estate, utilities, similarly. Get some of the news. Trump blames immigration for housing costs. India says oil prices would have rocketed without Russia's imports. We'll look at the oil prices. Again, S&P, Dow finished the best week of 2024. S&P breaks 6,000. Dow tops 4,400. S&P notches its 50th all-time high. Dow tops 4,400 for the first time. So again, all the major indices, I believe, made all-time highs post-elections. We saw the bond yields retrace after the rate cut decision on Thursday. So I believe the 30-year was up to 4.6 something, and it retraced back down to below 4.5. So now we've got the 30 under 4.5. We've got the 10 at about 4.3 and the 5 at about 4.2. So again, we saw a spike up in yields recently, and then we saw a retracement of those bond yields and increase of bond prices post-elections and post-Fed interest rate decision. Saw a pretty dramatic drop in oil right post-elections. It dropped down below 70, bounced back up a little bit. Now it's sitting just above that 70 support level. Natural gas declined back down, got support around 250 or so, sitting around 260. Gold also started to decline significantly after the elections. We saw a strengthening dollar. Gold and silver both retraced significantly. Gold now back below 2,700, so now 27 is acting as resistance. We can see the futures are all pointing up on all the indices. We'll see the Russell had an extremely exuberant rally post-elections, pre-FOMC decision. Welcome to Crow. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at a breakdown of the major indices, again, just a quick reminder, you can access these screeners via our notes documents and also in the screener sheets and our ETFs and Watchlist Google Sheets. So we see post-elections, very exuberant rallies in all the indices. Dow broke out, made a new all-time high. It's following this trend line pretty well, so it broke out, came back, so got support there. So I think that overall trend is pretty solid. See the, in my humble opinion, overly exuberant spike up in the Russell, the IWM. So it jumped up. It's not quite at a new, well, I guess they said the Russell the index made a new all-time high, but IWM, as we can see, I'll zoom into this a little bit because we're going to talk about it more tomorrow as well. So if I zoom out on the IWM a little bit, I guess it is showing. Okay, so the all-time high in November of 21 was 244.46. So IWM didn't quite make a new all-time high again, even though the Russell index may have made a new all-time high. So just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content should be considered for education and entertainment purposes only. But just to come back to that exuberant jump in the Russell, my humble opinion, and we'll talk about this tomorrow, I think that was overly extended at this point, and I'm looking for an opportunity to short the IWM using SRTY. Again, we'll talk about that in more detail tomorrow as well. SPY, another new all-time high, significantly extended above its trend, so we might see some retracement. Again, a lot of exuberance in these pops post-elections. Qs similarly broke above, made a new all-time high above that double top. So again, we might at some point, when the FOMO exhausts itself, see a retracement, retest of that multiple top again in the Qs. We look at a breakdown of technology components. See more exuberant jumps post-election. So we see ARK-K. Here's another one that, in my humble opinion, this extension, it's overly extended. I think this big gap up, big run up is overly extended, excessively exuberant. I'll look at that one in more detail. Again, this is what we're going to talk about tomorrow. Again, I'm looking at opportunity to short that overly exuberant pop using SARK, which is a inverse 2x ETF short on the ARK-K. So again, we see the previous high in ARK-K. 52-week was at about 54.52. So it's pretty close to that 52-week high. That should act as a resistance point. So again, we'll be looking at and talking tomorrow about shorting ARK-K with SARK. The FANGs, not quite as exuberant of a pop. Not FANG-U isn't at its 52-week high. But again, the FANGs have been more muted. We're seeing rotations in and out of the MAG 7. Semiconductors, similarly, not much of an exuberant pop post-elections. Been pretty flat. Again, overly exuberant pop in LabU, although again, it's nowhere near its 52-week high. Probably get some resistance at that recent peak. And I'll talk about why I don't really think that will continue given the post-elections theme. So I'm not hip on following that trend in LabU. The short probably isn't as positive, but if you're a short-term scalper, day trader, you could short that with LabD. Talked about the Qs. Broader technology, again, not quite as exuberant of a rally, bounced up to that upwardly sloping trend line. It's got support from the downwardly sloping trend line. So again, not overly exuberant rally in the broad technology either. Welcome, Sydney Osborne. Thank you for joining us. Hope you had a great trading week. Okay, let me grab a quick drink and we'll look at a breakdown of the group, sectors, and industries. Welcome, Gerald Pitts. Thank you for joining us. Hope you had a great trading week. So if we looked at a breakdown of the groups, sectors, the industries, we see Friday, we saw a bounce back in utilities, real estate, again, the interest rate sensitive sectors. So they got a bounce from the decline in bond yields, the FOMC cut in interest rates, the weakest sectors, basic material, energy. Can we see a trend back down in oil? Financials slightly positive. Industrials have been strong. So we see for the week, industrials were the strongest sector, technology, financials, energy generally strong, real estate, utilities, healthcare the weakest, healthcare and basic materials the weakest. So again, we saw exuberant runs in industrials, technology, financials, energy. For the month, energy is still negative, healthcare negative. So we see this recurring theme that healthcare is one of the weaker sectors. For the month, financials, industrials, technology. So we see that reoccurring theme. We look at an industry breakdown. Welcome, Katon, the trader also known as Easy Mike. Thank you for joining us. Hope you had a great trading week. Walter Lyons, glad to see you as well. Hope you had a great trading week. We see on Friday, we'll see a rebound in a lot of the REITs, some of the utilities. REITs, utilities, some oil and gas providers, stocks, midstream, regional banks pretty flat, banks pretty flat, steel negative, uranium, so see a slight retracement in uranium. Oil and gas drilling was negative, silver, gold pretty negative, silver strongly negative, solar, again we'll talk about the theme. We talked about this a while ago, but post-elections, pretty negative sentiment on solar. So for the week, energy, coal with some oil and gas, equipment, services, steel positive. Again, we'll talk about some of these sectors would benefit from Trump tariffs, and so saw some pop in those. REITs positive, negative for the week. Again, solar, very negative sentiment post-election. Silver, gold slightly negative. Other precious metals, agricultural inputs, we'll also talk about those. So for the months, airlines pretty positive, energy, coal, REITs, some REITs. Again, REITs rebounding. Again, negative, solar, shipping, copper, etc. Farm products. So I hope that all helps. Okay, next we'll talk about the economic data from last week. and look at the economic data coming up for next week. Just a quick reminder, as the important economic data comes out or important economic news, try to capture that as quickly as possible and post it in the Surf the Markets channel in our Discord. Our Discord's free to join. We'd love to have you join our Discord, actively participate in discussions related to trading. Also, again, a great source of real-time economic data, economic news. So you can see as this economic data comes out, I'll capture it from screenshot from investing.com, raw data from investing.com. Again, as other economic news comes out, post that out in the Surf the Markets channel of our Discord. So again, we'd encourage you to join and actively participate in our Discord. So some of the highlights from last week. So Thursday, not a whole lot. Monday, Tuesday, Wednesday, other than the elections, but I don't consider that directly economic data. But Thursday, we got jobless claims, and then we got the Fed interest rate decision. So jobless claims a little weaker than expected. So again, we're not seeing a deterioration in the job market, continuing slightly higher. The 4-week is down from previous. So again, jobless data is not really showing a deterioration in the job market. So really, the Fed doesn't need to worry about spiking unemployment. This was a little bit negative as the productivity dropped, but it was still better than previous, and labor cost was higher than expected, but again, less than previous. And we got the Fed interest rate decision as expected. And as we looked at the projections from last week, they did the 25 basis point cut that everyone expected. Um, some of the comments from the statement. So they removed the reference to gaining further confidence on inflation. And if you listen to the press conference from Powell, he said that doesn't mean that they're concerned really about increasing inflation. It's just that they don't satisfied that test, and therefore that's not a test that they're using going forward to determine for further rate cuts. So from Powell's press conference, some of the comments I highlighted: economy strong, so we've seen that. The economy is pretty resilient. Inflation has eased substantially. He's referring, year on year mostly, even though the progress has kind of stagnated lately. U.S. economy and labor market remains strong. Again, not seeing a rapid deterioration in the economy or the labor market. They're not concerned about the labor market being a source of inflationary pressure, so not concerned about a wage price spiral at this point. Core inflation remains elevated. He was asked about stagflation. He still doesn't seem very concerned about stagflation. In near-term, election will have no effect on policy decisions. He explained how they input policy decisions or potential policy decisions into their models, and then see if those actually get enacted, and then react accordingly. Geopolitical risks elevated, so they are watching geopolitical risks, and has said many times the U.S. fiscal path is unsustainable. So again, if anyone else had any other, it seemed pretty as expected. Nothing new. He's not going to tell you when the next rate cut's going to be for sure, or how fast, or how big, and that they're going to be data dependent and react accordingly. So again, he seemed pleased with where the economy and the labor market is. They still want to see inflation continue to come down, so they'll be watching that data. And also Friday, we got Michigan sentiment. So the 1-year inflation number came down a little bit, but the 5-year went up. So that's a little negative. And I think the bond market is also showing us concern for future inflation, and we'll talk about that. Expectations went up, so positive sentiment went up, and current conditions went down a little bit. So Consumers got a positive outlook, not terribly happy, and that's probably part of what we saw in the election results. So let me grab a quick drink and go. Just a quick reminder for next week. Monday is Veterans Day. The banks are closed, but the stock and options market are open, so settlements may take an extra day, but all the stock and options market are open. And then Friday is November options expiration, OPEX day. So let me grab a drink and we'll look at the rest of the economic data from last week and the upcoming economic data for next week. Okay, if we look at the rest of the economic data from last week, auto sales were actually not too bad right now. Durable goods, pretty much as expected. Factory orders slightly down, but pretty much as expected. Bond yields dropped as we saw after spiking. Trade balance, negative. ISM non-manufacturing, okay, better than expected. PMI, better than expected. Crude oil stocks up. We also saw the administration is refilling the SPR. I guess they exhausted their funds, so they've done all the SPR buying that they're going to do. Mortgage rates went up. Again, we had seen bond yields elevated, so mortgage rates probably caught up to that, but which is negative for the housing sector. Oil inventories up. So again, we saw oil prices drop post-elections and then rebound slightly. Again, the long-term bonds are still elevated. Talked about jobless claims. Natural gas storage up a little more than expected. Again, natural gas prices around 2.5, 2.6 or so. Talked about the interest rate decision. Consumer credit up, but less than expected. Talked about Michigan sentiment. Baker Hughes rig count steady, total rig count steady. So right now, oil and gas companies not doing a drill baby drill hasn't happened yet. So if we look at next week, got an OPEC report, see if they change their projections at all. That might impact oil. Now we've got Fed officials talking, so we'll hear their opinions, might cause some volatility. Mortgage rates, CPI. Okay, so we've got CPI on Wednesday. So this is the inflation numbers, consumer inflation numbers. If this comes out hotter than expected, that might quell any probability for another rate cut in December. So that'll be important and a source of potential volatility. Thursday, we've got an energy report. We've got PPI. So again, producer, supplier inflation, also important. Jobless claims. So again, all these will affect the probability of a further rate cut in December. Friday, we've got retail sales, so we'll see how October ended up. The last retail sales were better than expected. Kind of industrial production. So we'll see if manufacturing is weakening any. And then rig counts. We've also still got plenty of earnings. So you can go through the whole calendar of earnings. Still got quite a few, although other than NVIDIA, which I believe is like the 27th or something, all the Mag 7s have reported. So you'll want to look at which sectors, what other companies might affect your trade. We got some retail, Dillard's, foreign companies. So again, you can go through this whole list in investing.com. See if there's any that you're looking to trade or similar sectors that might impact your trading or your holdings. 3D Systems, a 3D printer. So I hope that all helps. Again, the next FOMC meeting is until December 17th and 18th, and we will get a new SEP, a new dot plot. So that'll tell us what their trajectory is going into 2025. I think that'll be interesting. I heard that the number of rate cuts, the expectation for rate cuts in 2025 is going down. So, okay, we'll grab a quick drink and we'll go into the market screen in Webull. Welcome, Alan Krantz. Thank you for joining us. Hope you had a great trading week. Just a quick reminder, if you're not already using Webull, you can still get up to 40 free fractional shares of stock by opening and funding an account with as little as $2,000. If you fund it with less than $2,000, you get 20 free fractional shares of stock. Each is worth $3,000 to $3,000. If you'd use our affiliate link in the description box below, you can get that as well as additional promotions they may be offering. At the time, they still are emailing me about bonus interest for deposits on your cash account. So again, you can take advantage of those bonus interest on your cash account by opening and funding your account in Webull now. And you can also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen in the online browser version of Webull. So we like to look at the histogram, the distribution of advancers and decliners on Friday. So we see had significantly more of the advancers than decliners, but the percentage of advance was quite small, quite a few unchanged. So even though the indices were hitting new all-time highs, the number of advancement was quite small. Thought this inflow was quite interesting. We see an exuberant run all through the morning till we get to mid-afternoon, and we see the NASDAQ was leading inflow till early afternoon, and then all the markets downtrended in inflow. They still had positive inflow, but again, from mid-afternoon to the end of the day, that inflow declined significantly. Also want to look at the treasuries real quick, pretty much unchanged. So we've got a little bit of a dip right at 8 o'clock in the 1 year, 2 year, and the 10 slightly positive. So again, bond yields pretty much unchanged on Friday. Thought this was also interesting. We're now in the greed area in the sentiment pie chart. And we can see now we're at 64 greed. Previously, we hit a bottom in fear at 37, and the previous month was only 62 greed. So we're greedier than we were going into the election. It's kind of interesting. It hit bottom right before the election, and then we see this exuberant run getting us into a greed sector on post-election. So again, a quick reminder, you can also see the near-term earnings calendar here in the calendar section in Webull. Go select next week, see it day by day. So you can see who's Live Nation, etc. So keep an eye on the near-term earnings calendar. Again, you can see who's reporting earnings on each day here in Webull quite quickly and easily. We look at the best performing industries for the week. And auto, actually a slight recovery driven by Tesla. So again, Elon Musk's association with the elections has benefited Tesla significantly. Financials, pretty positive. Oil and gas, equipment and services, so they benefit from the elections. Semiconductors, mostly positive. Construction and banking, coal, very positive. Biotech, significantly positive, probably part of the exuberant run. Construction materials, IT services, aerospace and defense, positive. We'll talk about some of that. Got the best performing ETFs or the ETF performance for Friday. So up on the Dow, up on mid caps, up on the S&P, up on mid caps. NASDAQ positive. So again, indices all positive, new all-time highs. We'll talk about the ball crush in the VIX post-elections, as we talked about pre-elections. Small caps, again, pretty exuberant. Industry-wise, industrials pretty positive. Healthcare, surprisingly positive. Financials, utilities, real estate, energy, surprisingly pretty split. Communication services, negative. Technology, generally negative. Basic materials, very negative. Cyclicals, pretty split, but slightly negative. Defensives, quite positive. So even though we saw that exuberant run, kind of rebound back into defensives on Friday. There's grains, probably wheat. $25 years, zero coupon bonds. Okay, next we'll also look at the futures and FinBiz. Just a quick reminder, now you can also trade futures in Webull. So you can hear their previous discussion on futures trading and their previous offers and the discussion topic in our Discord. Okay, if we look at the futures in FinBiz, see these exuberant pops in all of the indices. So they all made, new all-time highs. See the Dow had been declining slightly, got that support at 4,200, and then post-election jumped up. The S&P similarly had been slightly declining, exuberant pop on the elections, and the NASDAQ, got support at that 2,000 flat, and then a pop. Looks like it might be topping out, and then, the extreme exuberant reaction in the Russell. So again, this is pre the FOMC interest rate cut. This is post-election pop in the IWM and the Russell, and then it was actually slightly negative to flat after the expected 25 basis point cut. So this might have been part of this pop, might have been in the expectations of that cut, and we didn't really see a whole lot of pop on the actual rate cut. So again, in my humble opinion, I think that was overly exuberant and possibly an opportunity for some level of retracement correction. Nikkei, topped out and rolled over. Euro stocks is downtrending. DAX, there's some turmoil in the German political system. It was kind of downtrending. Again, got that ball crush after we got a pretty certain and quick, decisive election results. Surprisingly, quick decision on the election results, in my humble opinion, removed that uncertainty. So we got the wall crush that we've been discussing. So also want to look at the term structure on the VIX. As that has changed significantly. So again, VIX dropped all the way down. The actual VIX we'll see drop below 15. Just a quick reminder, you can see the VIX term structure, futures term structure, and the link on our homepage. Homepage is beachbumtrading.com, bum without the U. So we'll go down to that. So you can see the VIX futures term structure. So the interesting thing is now we had been in backwardation. The near month had been significantly higher than December. The November had been significantly higher than December. Now you can see we've got a contango. So the future months are higher than the previous month. You see the November drop down to 15. You can see the actual VIX is now below 15. So there's some opportunities, using UVXY, some of the VIX futures ETFs that they should go up going forward into the further months. So again, dramatic shift in the structure of the VIX. Had been backwardation. Now we're in a contango. And you can see they're projecting, a significantly higher VIX going into next year, and it's significantly low right now. So again, some opportunities. The VIX isn't, at a bottom, go as low as 10 or 12. But I think, again, that's a potential opportunity of profit going forward as well. So anyone who caught that, ball crush right after the elections using some of our short VIX ETFs, SVXY, SVIX, SVOL, congratulations on catching that, immediate ball crush that occurred post-elections. Also talked about oil. Again, oil had a dramatic reaction post-elections, immediately dropped down below 70, did rebound, recapture that 70 level. You can see it's been retesting that 70 several times. Looks like it kind of peaked out at that previous high, filled that gap, and then rolled over. We'll see if the 70 level holds. It did seem like the sentiment post-elections was definitely down on oil prices. So I'm looking for further decline, possibly a retest of this low, maybe even a retest of the previous low. I think that was about 67, about 65. We got stopped out of our position in USOI, took that profit. We'll be looking to re-enter a sizable position in USOI. Again, that's a monthly dividend payer on oil on a rebound off of one of these lows. Again, natural gas been kind of declining. Tested, that 250 level, filled that gap, bounced back up, but pretty much downtrending right now. Again, gold, pretty dramatic correction off the election, did rebound a little bit, so it's retesting that 2700 level. That holds, it could retest the previous high. If it continues to break down, probably retest the previous low. So again, we saw dollar strengthen as we'll see. So gold and silver, significant down on post-elections. Again, silver lost the 32, tried to regain 32, so now 32 is a resistance level, a pretty crucial pivotal point for silver. So again, if it fails to regain and downtrends, we'll probably see a retest of the previous low in the low 31s or so. Similarly, other precious metals, platinum down, palladium down, copper pretty flat. Corn trending back up, testing its previous high. This is interesting. We'll talk about the post-election potential effect on soybeans. Oats rolled over, rice down, wheat pretty flat, so not a lot of reaction. It's got resistance at 580, keeps retesting at 580, support at 560, so we'll see which direction it takes. Lumber looks like it might have topped out. And again, we saw, significant drop in bond prices, spike in bond yields, right, or pre-election, and then a slight rebound. Again, we got that interest rate cut, so bond yields did trend down a little bit, bond prices rebound. See if that trend continues. The dollar hit 105, so again, strong reaction positive in the dollar, so negative on the foreign currencies. Although the yen did hold up, looks like it bottomed and bounced. So again, we'll see if we get further rate increases from the BOJ, be inverse to rate cuts in the U.S. Okay, I'm going to skip forward and come back to our ETFs. I want to definitely cover our theme for this week, talk about strategies, and then we can look at what ETFs we can use to also trade those strategies, those themes. Let me grab a drink a sec. Okay, again, our theme for this week is making money trading the post-elections, and we had come up with strategies before the elections on how we could potentially make money trading based on whatever the results from those elections may be. So I put a link back to our notes from October, probably 19th or 20th as part one before the elections. Talked about how to make money trading pre-election. So we identified some potential Trump trades. If Trump wins, what would be positive, negative? If Trump wins versus what would be positive, negative? If Harris wins, we now have, the results. So what was positive, we identified, so oil and natural gas producers, service companies, etc. Again, not necessarily the oil price. And we saw, again, that drop in oil price, but it is positive for some of these oil and natural gas service type companies, exploration companies, cryptocurrency. So we saw, again, Bitcoin made several new um, all-time highs this week, so very positive for cryptocurrency. We'll talk about tomorrow how we're trading that spike in Bitcoin. Apparently, Trump is pro-nuclear, so this should be positive for the nuclear industry. Also, companies that benefit from less regulation, that would be potentially the nuclear industry, maybe one of those industries. So he talks about reducing regulation. So companies that may benefit from that, utilities being one, oil and natural gas, doing more leasing, less restrictions, etc. Some of the negatives. is pharmaceuticals and biotechs. RFK is apparently going to be focused on healthcare costs, and that would be a negative for pharmaceuticals, also for biotechs, because obviously, if the big pharma companies are making less money, then they can't spend as much to acquire biotechs, spend as much on licensing. So again, I'm not terribly bullish on the whole pharmaceutical biotech industry going forward. Also tariffs, he's big on tariffs, and we talked about a potential impact of tariffs going into the election. So now we want to think about, what could be the potential impact of those tariffs. Talked about the impact on and possible retaliation in countries like China. So companies um, that could be impacted negatively by tariffs on China or by retaliatory actions from China. So exporters, again, U.S. exporters and commodities that may suffer from retaliatory actions, like we'll look in some detail about what those might be. Also, we talked about countries, again, China, Europe, Mexico, we talked about would all be negatively impacted by tariffs. So one of the things I asked based on this idea of retaliatory tariffs, particularly from China, is for which U.S. exports is China the biggest buyer? So where would the biggest impact from retaliatory action from China be? So I asked ChatGPT that question, and we'll want to go over that answer just briefly. And then again, you can read this in more detail at your leisure via the link in the notes. So you could see some of the key exports for which China is the biggest buyer. Number one is soybeans. So again, I was a little surprised that we didn't get more of a negative reaction in the soybean commodity. I was surprised also semiconductors and manufacturing equipment. I know ASML, some other AMAT, um, are semiconductor equipment companies, so they could get hit. Also aircraft and aerospace, so Boeing, other related products could be the target of tariffs. Again, I was surprised the crude oil, so largest imports of U.S. crude oil. So I would have thought they got replaced a lot of their production, also liquefied natural gas, so LNG. And I would have thought they'd be getting a lot of theirs, even though it's a sanction from Russia, now potentially from Iran. So if Iran gets sanctioned, you might see China getting more oil from Russia and Iran and less from the US. EVs, so a couple double negatives on EVs, automotives. Tesla could get hit. Pork, corn, other grains. That was another one I highlighted as all the grains. We know they do soybeans. I thought they did wheat too, and cotton. So again, they do a lot of apparel manufacturing. So again, those are all areas, and also, we talked about specific companies if they're reliant on a lot of their revenue from China. Could be Apple, could be Nike, etc. Estee Lauder, we've heard. So think about those companies and trade accordingly. That could be negatively impacted by tariffs. Their inputs cost increases, squeeze their profit margins, or could lose revenue due to retaliatory actions. So we'll have to listen very carefully to what tariffs actually get applied. So it was pretty positive for these sectors on Trump's win. We saw, again, significant negative reactions in the ones that would have been positive on a Harris win. So it became negatives on the Trump win. So cannabis, again, kind of a no touch at this point. Also, many of the states, including Florida, that had recreational cannabis on the ballot did not pass. So I think 4 out of 5 or something did not pass. So all those potential catalysts in cannabis are gone now. I don't know of any positives catalysts for cannabis at this time. Also very negative for clean energy, solar. Trump's talking about pulling out of the Paris Accord. So any company who is benefiting from those restrictions, also EVs. He talked about removing the requirement, federal requirement to be mostly EVs in the future. So again, other than Tesla, I would say you may see a very negative impact on the whole EV supply chain as well. And also neither, in my humble opinion, neither administration really would have been positive for pharmaceuticals, biotechs. So again, I think that pop in LabVIEW in the biotech industries was just a part of the exuberant risk-on move, and particularly technology. So we had also talked about how to make money in November of a presidential election year, and you can hear ChatGPT's answer via the link in the notes. Also, our previous discussions about how to make money trading election years, also trading in November in general, trading in the fall. So we've got links to all those videos, and you can access all of those in our notes. So love to hear y'all's feedback too. Do you have other ideas that might be positive or negative trades based on the results of the election? Um, what do you think, ideas for other areas that might be impacted by tariffs, by decreasing regulation, mergers and acquisitions? Also, I guess I missed that one, is the Biden administration been pretty negative on mergers, and that we think that that might be open for business again. So we might see, cheap companies get scooped up by companies that are flush with cash. Also, they blocked a number of mergers. It was positive, so we saw a positive reaction from some of those companies that had planned to merge and been blocked. So I think we'll see a pickup in mergers and acquisitions, also big banks that benefit and get fees from mergers and acquisitions. I think JP Morgan, some of those big banks make a lot of money on mergers and acquisitions, so it will benefit them as well. So again, let me know what other ideas you have for making money post-elections. Put it in the comments to our video or in our Discord. Again, love to hear your additional ideas. We can help each other make money trading, help each other succeed in our trading careers. Okay, I've got a few minutes. So we'll go back to our ETFs Google Sheet. Grab a quick drink. Just a quick reminder, as we identify these trading ideas, trading strategies to either long or short any particular commodity, index, theme, etc., and we jump to our ETFs Google Sheet, and we can find an ETF to long or short based on that trade idea. And you can do likewise using our ETFs Google Sheet, which you can get 24/7 access to by joining our Patreon. Grab a quick drink and look at our ETFs Google Sheet. If you have a particular theme or topic you'd like to look at, you can throw those up in the chat. We can try to take a look at those in the time that we have remaining. Okay, given our time, I think I'll come back to some of these enhancements and additions that we have. Um, uh, Future time, either tomorrow or in a future weekly trading game plan. Just want to highlight one that was related to the election that Born to Be Free mentioned. So you quickly look at that one, and I'll come back to the others and talk about those in the future. But he mentioned this ETF CEE as a play on the end of the Ukraine war. So again, another theme strategy post-elections is Trump pretty much wants to end the Ukraine war, and we'll see a pop in the CEE, which is a Central and Eastern Europe fund based on the post-election. So if I go to the research sheet and I search for CEE, see here's the Central Europe, Eastern Europe ETF. See it's popped up. It's pretty much near its 52-week high, very close. Doesn't have a super high risk reward from a 52-week, but got some upside from bottom to top. We look at it in FinBiz, and we see that, exuberant pop post-election. So that was a good trade idea. Thank you, Born to Be Free, for sharing that with us. Again, great trade idea. Hopefully you made some good money on that trade idea. See, it's not optionable. It's got a small dividend. AUM is, quite small. Volume is pretty small, so might be somewhat illiquid. We look at, don't have a composition here, so this is a fund, closed-end fund. So let's see if we can find something about it in ETF database. May not, since it's a closed-end fund. So if we zoom out a little bit, see that pop up. Still below its long-term moving average, got plenty of upside. So see a dramatic drop in 22. So again, plenty of potential upside. Probably go fill that gap. Get some resistance from the 50-month moving average, but again, plenty of upside still. So on any correction, that might be a nice one to pick up, especially if the end of the Ukraine war would benefit some of the Central and European countries. So if I look at that in the ETF database, see it? No. So it's not listed in the ETF database because it's a closed-end fund. So again, we look at the definition. Public equity markets across Central and Eastern Europe. Benchmarks performance against the CECE, RTX, and ISE National 30. So again, a little bit difficult to see exactly what they're investing in, but again, a nice trade idea on the potential end of the Ukraine war. Okay, let me very quickly go through the rest of our ETF database. Again, we'll talk about the other additions and enhancements in the future, but you can see these and reference them at your leisure via our notes. Talk about SARK. Again, I talked about shorting RK using SARK. See long and short Bitcoin. These are Bitcoin futures. We'll talk about, we're now long BITI. We'll talk about that in more detail tomorrow. Again, these are based on the Bitcoin futures, not the spot price. Got some others on the miners. Again, we talked about cannabis, but again, I don't see any future catalysts. China's been very volatile, so it popped up significantly and then dropped. Even though they announced further stimulus, apparently the market wasn't hip on that further stimulus, and Friday it retraced significantly, but again, a lot of volatility. So if you're nimble, I believe the crows are pretty good at trading yin and yang. So again, if you're nimble on any given day, plenty of profit to be made. See long or shorts on any of the given indices. Gold, again, trending down now. So GDXD or dust. Talk about oil. Mexico, again, we think that will be negatively impacted by tariffs. So I'm not real hip on Mexico right now. Natural gas getting pretty flat. And again, got mixed signals on that. So oil, again, if you want a short drip, SCO, long, UCO, and again, monthly dividend payer, USOI. And longer short the SPY. Semiconductors, silver, again, been declining, so that's shorts in silver, CSL, SSG. Small caps, and tomorrow we'll do a comparison of TNA, which is a small cap, Bull 3X, and TZA, which is the short version, with SRTY, which is the short on the Russell. So you can compare those and see which one has the risk reward profile you prefer. And we're looking at SRTY. We'll talk about that again tomorrow. Again, not real hip on solar. Negative sentiment now on solar. Again, we saw a rebound in bonds. So you can see a variety of treasury bond ETFs, long or short. Uranium. The VIX, again, hopefully some of you made some money using our short ETFs on that ball crush on the VIX. We looked at the term structure, future VIX futures trending up now. Talked about wheat and the yen. So again, if I missed your ticker in the chat, please repost that real quickly. Or again, you can always put it in the comments or in the Discord. Want me to take a look and give you my opinion on any of those ETFs or other ETFs that you'd like us to research, you can always tag us in the Discord. We're BeachBum Trading, all lowercase, no other characters, symbols, etc. Anyone else is an imposter, so please ignore and report them. Again, if there's any other ETFs you'd like us to do a research on or give you the options from our ETF Google Sheet, and again, you can get 24/7 access to our ETFs as well as our other Google Sheets by joining our Patreon. Okay. Again, if I missed your ticker, your question previously, I apologize, and please put those in the comments or in contact us in our Discord. If you have any other questions or comments, love to hear from you. We'd also love your feedback on what we can do to improve our weekly trading game plans, any of our other videos, tools, resources, community, etc. We really need your feedback to continue to improve and add more value for all of our fellow BeachBum traders. We hope you like this content. Please smash the like button. Help us try to get the Google algorithm to someday show us some love and share our content with more traders, more BeachBum traders. We also really need your help to directly share our content, repost our videos, etc. on your social media channels so we can continue to grow our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So tomorrow, we'll take all of this input, all these trade ideas, all this market analysis, and we'll use it to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also look at how we can use dividend payers and several option strategies to also generate income while we wait for our swing trading stocks to set up. So we hope to see you all back again tomorrow, 10 a.m. Eastern Time on Sundays for part 2 of our weekly trading game plan for the trading week of November 11th through November 15th. So thank you again to everyone that joined us in the chat, everyone who's watching after the fact. And again, we hope to see you all back tomorrow for part 2. Thank you again and have a great day.